The idea of buying a good business is it compounds shareholder wealth by growing faster than the market. The fact is that our country is just too large to write it off as an emerging economy. So while markets may keep going up and down, the economy seems to be in fine fettle.
What sectors do you think investors should have their eye on?
So it's always a
Welcome to Deep Dive. I'm Nivedita, and today we're joined by Mr. Satish Ramanathan, CIO at JM Financial Mutual Fund. In today's episode, we'll dive into the markets, investing through cycles, and how to think long-term in a constantly changing world. Let's get started. Thank you for taking the time out today, Mr. Satish. I'm really looking forward to this conversation.
Thank you for having me over. Thanks, Nivedita, and thanks to the Mirae team to have me over to discuss about my progress through the world of finance.
Sure. So to begin with, I would like to ask you about your journey in finance so far. How did you get started? And what eventually led you to JM Financial?
So it's been a long journey. I used to like reading annual reports because it interested me. I used to read several annual reports when I was in college, and that actually laid the foundations of understanding how corporate India worked. At that time, the number of companies were far less, and it was interesting to read how companies made their business plans. From there on, I became a business analyst at Tata Economic Consultancy Services after finishing my MBA at Texas A&M. And then that was actually a lot of field work and analysis on understanding companies. It was actual grunt work, which led me to becoming a credit analyst at ICRA. That laid the solid foundations of finance in my career, and that actually laid the foundations for looking at cash flows as one of the key aspects of understanding a company. And from there on, I became a research analyst in Birla Securities, and from there on I moved to the buy side. So I worked my ranks up. I worked on the sell side, buy side, economic research, and finally I am where I am at JM Mutual Fund. It's a series of trysts with destiny, if you would, but I've got where I wanted to be, so I'm quite happy with that.
Okay, so that's quite a diverse background, and it seems like you have a lot of in-depth experience in research. So can you tell me how all of these experiences have shaped how you approach the markets today, and also, of course, your investment philosophy today?
My investment philosophy is driven by growth and cash flows. So ultimately, companies need to deliver profits and cash flows and also grow for their investors. So typically, companies that pay out a large dividend or do share buybacks, while in the short term may look good, but over the medium term tend to not create any further value to the investors. That's because they are not compounding their money. So the idea of buying a good business is it compounds shareholder wealth by growing faster than the market and also creating positive cash flows for shareholders. And these have been the two guidelines that I analyze companies with, yardsticks. And my diverse background has helped me understand companies. I love going for factory visits. I see companies, I see the operational metrics, and I don't mind getting my hands and feet dirty to understand a business. That's the way I actually have understood many companies in depth. And my love for auto ancillaries and autos is something which goes beyond just research academia. It's a personal interest that I have, so therefore it takes me to understand these businesses a little better.
So that's quite interesting. It seems like you have a lot of hands-on experience when it comes to going to companies and analyzing what they do. So that was pretty interesting. As we know, global markets are quite volatile right now. So I would like to ask you, how do you currently view Indian markets right now in this context?
Indian markets have their own unique strength. the strengths of business diversity and a large economy. It is true that the markets are volatile because of oil prices going up.
Yep.
But the fact is that our country is just too large to write it off as an emerging economy. And the economy is doing very well, robust. Balance sheets are good for corporate India. The government finances are also under check. Personal savings rate is quite high. And all this points to a sustainable growth in the country. So while markets may keep going up and down, the economy seems to be in fine fettle.
Oh, okay. So it looks like there's positive growth for India in the medium term or long term.
Yes, I think we should be positive about the growth opportunities that India has. The large population and large markets, and also government initiatives in defense, in EMS, and several other sectors point to a new set of industries emerging and new set of companies emerging.
Oh, okay.
Which will create a bigger and wider investment universe for investors to participate in.
Oh, okay. So you mentioned that there might be new sectors emerging and new opportunities. So can you tell me now, when it comes to the medium term, let's say 3 to 5 years from now, what sectors do you think are emerging, or what sectors do you think investors should have their eye on?
So it's always a balance, but the fact is that India at this juncture requires energy at an unprecedented rate to grow its manufacturing and to grow and meet the population requirements of transportation and logistics. And as we are aware, a country that has low logistics cost is the one which is most efficient. So we need to find out fuels and methods of transportation and transporting people, as well as industrial power at the lowest cost. So what clearly emerges in this current situation is that solar and alternate energy is the way forward for India because it has limited hydrocarbon reserves. We do not have clear oil reserves, so we need to build that up. So it will be through alternate energy and probably the battery and EV trend, which will reduce India's dependence on imports of crucial oil and gas.
Oh, I see. So ESG is...
ESG is one aspect that we go through in corporate, but the fact is, in a developing economy such as India, we cannot have environment as the primary aspect because while we can use services as ESG compliant, we also have to have bricks and mortar industries and buildings which are not that ESG compliant. So we need to maintain a balance of that and carry on with what best we have.
Okay. So now I'd like to ask you, in today's markets, in the Indian markets, how does JM Financial stand out? What sets it apart from the competitors?
JM Financial has had a long track record in Indian finance industry. The company has completed 50 years and it's led by very senior finance professionals across various segments, and the founder has been a visionary and a leader as well. So I think that's one of the DNA of JM Finance is what sets it apart, of doing the right thing for the people and the investors.
Okay, so it seems like it's had a pretty long run so far, 50 years or so.
Yes.
Okay, so that's very interesting. And now I would like to ask, now there's a lot of short-term noise in the markets, right? Lots of volatility. So especially for a long-term investors, for long-term clients, how do you balance the short-term noise with long-term structural opportunities?
I think the key aspect that we need to bear in mind is that the short-term noise actually creates opportunities for the long term.
Oh, that's interesting. How?
Because short-term volatility and sudden market drops, crashes, etc. actually create opportunities for investors to invest over the medium term. And as you are aware, the mutual fund industry has done exceedingly well through the systematic investment plan, which is exactly meant to ride over short-term volatility. And I think investors have also matured in this aspect, and they are riding out short-term volatility for the medium-term financial planning through systematic investment plans.
Okay, so that is quite interesting. I liked your perspective about how short-term volatility creates long-term opportunities. Now, I have a question specific to JM Financial about JM Financial's investment philosophy. How do you approach asset allocation and portfolio construction?
Portfolio construction is typically bottom-up, where we look at good quality businesses and companies with a track record of executing and visibility of growth. So we have growth as the central theme. We have a unique acronym called GEEK, which is growth in earnings with earnings quality. While it presumes that we buy at any price, actually we are value conscious and we buy it at reasonable prices. And this is what actually sets us apart, because we are growth oriented investors in an emerging economy such as India. Growth opportunities abound, and stands to reason to ration money carefully into the growth opportunities where you can compound your money. So that's what we do in JM Mutual Fund.
Okay, so now that you have explained your investment philosophy and your approach, how do you approach risk management? Because risk is a major factor in investing.
Risk goes hand in hand with investing, and risk management is key to actually the investment process. The funny thing is, we do not understand the risk till we invest, and it's only after we invest we know what risk we have taken. The idea is to ensure that we have risk controls and monitor what actually hurts the portfolio carefully, and when in doubt, let it out. So what happens is, if we are not clear about a company's prospects, or something seems very iffy, then we reduce or exit our positions, because we do not want to jeopardize our investors' prospects on hunches. So we are fairly clear about that, and we ensure that risk is controlled and contained most of the time.
So you mentioned some measures that you take towards risk management, for example, reducing allocation in a portfolio. Could you elaborate a little bit more about that? Any other risk control measures that you take?
No, so we monitor the portfolio volatility. We
Okay.
monitor the portfolio volatility versus peers, versus benchmarks. We monitor single stock volatility as well. If there's a stock which is actually increasing the portfolio volatility, then we trim it or reduce it to ensure that the portfolio volatility comes down. The objective of our investment philosophy is to get returns with meaningfully lower risk than the market. If we are not able to do that, then we reduce the risk profile.
Okay, I see. So now when it comes to making such decisions, can you tell me an example of a contrarian call that you took that worked out, something that was against the consensus but still worked out well for you?
Unfortunately, we are not allowed to discuss names in this.
Of course.
But I think the theme, when the Iran war broke out, I think one of the key things that we moved reasonably fast was the power sector.
Okay.
So we added into the power sector, and that has played out reasonably well, because we understood that the energy dependence of the country was way too high, and we needed to move into the power sector, which is a domestic industry and a domestic source of energy. And that's an example of looking at bottom-up and macro themes, moving and tilting the portfolio accordingly.
So you adjust as and when required according to the market conditions?
Not market conditions, about the macro and the prospective economy tilt that can emerge because of these events that take place.
Oh, okay, I see. So now I would like to ask you, as a CIO, how do you ensure alignment between, let's say, client expectations and also strategy and execution?
So our philosophy has been to focus on risk controlled returns, and the basic thing is that we would rather let go of opportunities that are too risky than to participate even if the upside is very high. I think that is something which we want to leave behind with our investors, that this is a prudent fund house that will actually focus on controlling risk rather than just chasing returns. But that doesn't mean that we keep a very high cash level, because that's not the mandate that we have been given. We use cash on a tactical basis in the portfolio, but we do not maintain it for long periods of time because we are uncertain of the future.
Okay, so this is somewhat suitable for investors who worry about risk?
We are in the middle of the pack when it comes to risk and containment. There are times when we are swung to slightly higher risk because of our higher investment thesis and focus on growth. But for investors, they have to bear in mind that because we are a growth-oriented fund house, there may be a little more volatility that comes with it, but over the medium term, they would be rewarded.
Oh, okay. So in any case, I think risk is an integral part of investing, so they should keep that in mind.
Yes.
All right. So now when it comes to India's growth story, you mentioned that India is emerging. We have a lot of sectors growing. The economy is in a good state. So how do you see JM Financial's role evolving when it comes to India's growth story in the next few years?
I think it is integrally linked to JM Financial's growth, is linked to India's growth. And we stand to benefit from the growth momentum that comes through. As you are aware that the parent is one of the leading investment banks in the country. So a lot of new offerings, new capital raises flow through the parent. The mutual fund benefits from savings that investors make. So I think we are joined at the hip when it comes to India's growth. So we will benefit from India's growth from that for sure. The other thing that we also want to highlight is that JM Mutual Fund is introducing newer products and newer themes as well, which will grow along with the country's growth.
So that's something that investors have to look forward to?
Yes.
All right. Thank you so much for your insights today. I really enjoyed having this conversation with you.
Thank you, Nivedita. Thank you, Mirae Asset Sharekhan.
Mutual fund investments are subject to market risk. Read all scheme and related documents carefully before investing.